This is Martin from Brokerage, the channel for learning about trading and investing. Welcome to daily stock market analysis show. We basically look at the technical charts and then try to understand what happened in the market during the day and plan for a better trade for the upcoming day. That's January 12th, Friday 2024. That's tomorrow. So we had a very volatile, a flat but a green close, but a positive close, not a green one. So basically we are consolidating at the very top. Not too much of retracement is coming, especially in the Nifty. Let's look at the market wrap up where all the points are put together. You can probably take a screenshot of this or read through that if the audio is not much clear enough. So before going that, we would look at the charts. The Nifty, if you look at the candlesticks alone, it's a small body. Every small body is indecisive. The wick size on both sides indicate the struggle between the bulls and the bears. And Nifty also a small body. It's more of a spinning top candle, spinning top. If it is at the very top, here it's more or less the same in Nifty. It's kind of slightly dangerous if the price moves below the candle low, and also if there is big volumes that comes in. So small body indecisive, slightly bearish candlestick pattern, but the day was positive. Nifty managed to close positive with a flattish outcome. So we just had 28 points gained, 0.13% and 0.16. That's hardly 77 points on the Banknifty at the end of the day. So if you look at the intraday price action, you can see the volatility. Somewhere at the 2 p.m. there was a big dip and then a quick recovery. That might have spoiled the expiry game for a large group of option traders. Otherwise, the markets began with a gap up, trapped the bulls and then inversed immediately. Second candle, 5 minutes itself, it started the down move and then went range mode moves, and then 2 p.m. it did some circus. That's cool of everything. And otherwise, it was flattish close. Similar thing can be seen in the Banknifty as well. You can see that the 2 p.m. drama was around 300 points dip and 300 points gain, all in after 2 p.m. Here also it was a gap up which trapped the bulls and then immediate reversal and then range bound and then in between went very volatile. So that was the kind of price action. Otherwise, the price is at the very top. Hardly 1.75 retracement is coming yet. 20 exponential moving average is respective of Nifty, but Banknifty lost the 20 exponential moving average. That was at the top of the trendline channel, and retracement is pretty better than Nifty. At least it's with 3.5 near to that. In a range bound, consolidation is pretty much evident from the Bollinger Bands. If you look at that, contraction is very much visible on the Nifty, and also the contraction has begun, and then so that indicates more consolidation again. That's it. If you look at the support resistance levels for the Nifty, it remains more or less that of the previous day, and it's 21,834 all-time high would be the first resistance to take out, and after that 21,900, and then the big rounding number at 22k. Coming to the supports and downside, 21,420 would be a major support, which is 20 exponential moving average, and also it would be the bottom of that rectangle box or the consolidation zone. The breach of that would take it to 21,000, and 21,000 has got confirmed the supports of Fibonacci extension and Fibonacci retracement 21.6. So 21,000 would be a rounding number as well. So if that's breached, the next support would be at 20,800, which is 50 exponential moving average. Right? Similarly, if you look at the Banknifty on that side, The first major hurdle will be 48k, getting that back resistance. After that 48,636, which is all-time highs, and after that the 49,000 big rounding number. Resistance upside. Downside, the first support could come in at 47,000 mainly, because it's a big rounding number, and it's a confluence of 23.6 Fibonacci retracement and also 61.8 Fibonacci extension. So if that is breached, there is a gap and a 50 exponential moving average confluence support at 46,500 nearby zones. That's support resistance for the Banknifty. Now let's come to the wrap up. So it is a flat close. We've already seen that. Talking about retracement 1.75 and 3.5 in the Nifty and the Bank respectively. The rally extends from 26 to 30%. Last swing low from there itself rally is 16%. Managed to close above 47,400 on Banknifty and 21,600 above Nifty. Intraday price action, we have already seen that. Fyers data has not come in yet, but yesterday and therefore yesterday Fyers are selling. Domestic business to buy. It's 2,000 or 12,000 I believe. So far that hopefully it's 2,000. So today's data has not come in yet, but yeah, so nowadays it's difficult to predict. Earlier it was the Fyers were consistently selling and they were constantly buying. Now it has changed. Since December when the Fyers are back, they used to book the profit randomly, and then it's difficult to predict. But given the fact that to this big fight, either one of them would have bought and another one would have sold heavily. Otherwise the 2 p.m. dip wouldn't come unless the institutions sell. Anyway, so looking at resistance and support, we already seen that. I'm not touching upon that once again, but the momentum remains to be bullish on the short term on the daily charts for the Nifty, but momentum is still not recovered from sideways. Although it's rising up, it is not still recovered and it has not climbed out of the bullishness yet after it slipped on the bank. Trend indicator ADX is showing the crossover to be zone is still there on the Banknifty, but it maintains the bullishness on the Nifty. So Nifty and Banknifty, there is some divergence with the weakened Banknifty with respect to the momentum and the trend indicators on the daily charts. Brokerage bonds, both of them are contracting and indicate sideways movement, and Banknifty is more evident sideways consolidation because the contraction is more evident there. So to wrap up, technically the charts are bullish. We are in an uptrend. It's a correction that's going on. We don't know how far it will go, but still remaining at the top. Correction has hardly come in. It's only 1.75 and 3.5 less than that in the case of Banknifty. So the market has done a CAP change in bounce for the previous resistance has taken the support and the bounce happened. Second day, today also, although it managed to close clean, it managed to close positive for the second day, and it's expected that continuation can happen. But at the same time, you have to be cautious with the fact that the correction is not enough for the kind of vertical moves that happen from the November end so far. Look at the major sectors, all of them closed red today. Major industry sectors like the IT, metal, like that. So, except auto, all of them closed red. All the major industries in the short term, from the momentum perspective, it maintains the bullishness, which is positive, except the IT and the FMCG that has slept into the sideways. But the industry heavyweight stocks like HDFC, Reliance, ICICI Bank, and all this, but heavyweights, they all closed red today, except Reliance and ITC and Kodak Bank. That's all right. So Reliance is really doing good. It's holding on. That's probably the only major heavyweight stocks that hold the market. Others are all in sideways. If you consider the momentum was today also, Reliance was positive. So there is some momentum dip that has come. There is some trend crossover that has come in the very short term. And that is what consolidation of sideways is all about. US indices show So it's a mother market. US indices means the Dow Jones, the S&P 500 and the Nasdaq. They are all showing some green. Some retracement had come in last week, but quickly it recovered. Remember that US indices were rallying just like ours, and it's very close to all-time high. So which is positive. Dollar is flat again, and rupee is as weak as it is around the 83. Crude oil is showing some spike greens, but it is flattish. And remember, it is done a lot of retracement at the 70 levels and spiking there. Similarly, the gold, the hedging instrument, is also consolidating. Had hit the all-time high a few weeks back, got sold into, and then did not wasn't ready to fall down. Just consolidating at the very top is what you can say. Now, every dip that happens may be an opportunity for buying investing for the investors, but for the traders, direction is clear. At the same time, we are extremely cautious with the fact that corrections have not come in as it has been due for a long time. So it can come in with big intensity at this point, or it could make another breakout and then hit the 22 and a little more above and then come in. You never know when it comes in. So just have to play on the several resistances based on our technical analysis that you can stick to that. More important, you have to manage your risk and cut short a person's side if the VIX is spiking up. I think I missed the VIX had a flattish close today and it's at 12.7, which has not been pulling off even when the market was at all-time highs. It continues to be that, but small 3-4% of cool-off has happened in the last 2 days. And that's happening when the market is retracing, which is contrary or divergent, right? So that's how VIX has been behaving. So otherwise, the difference between the spread of implied volatility, that's more of a VIX, what indicates that volatility, and the realized actual volatility in the market. So the difference is somewhere in the mid-range, is positive for the option sellers for some period of time. But directionally, playing is what you have to do until both of the indices are confirmed to be flattish, so for some period of time. Right. So that does not come in until the next direction itself, probably with spreads, but yeah. But if you're an expert, since the some option seller has some edge because of this difference in the spread of the implied and realized volatility, and also the IV percentile is also very high. If you're an expert, you can still gain from option selling, but otherwise it's a directional market so far. It will change any time, and then charts are saying that, then you have to change the strategies and the options accordingly. So that's all I have for the next day. If you're watching this and not subscribed, please subscribe and share to your friends and colleagues, and put in your feedbacks, and we'll try to improve the best. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.